think there are a couple of driving forces. Number one, the economy in Japan, which was basically stagnant, suffering from deflation for over 2 decades, is finally coming out of its slumber, so to speak. So now you have deflation has turned into inflation, which specifically means wages are going up, prices are going up. So now you have this sort of positive price cycle that is really helping not just companies, encouraging them to invest, but also consumers encouraged now to spend. And so a positive economic tailwind is number one. But number two, more structurally speaking, the government of Japan, after many decades of frankly not focusing on corporate governance matters, has really begun to zone in on the fact that frankly a lot of companies in Japan have, say, inefficient balance sheets, or they're not focused on their core businesses. They have a lot of peripheral, non-core businesses. And about 40% of Japan's publicly traded market, by the way, is trading below book value, the highest ratio probably in the developed world. So now there's a keen focus and pressure on these companies to change, get rid of non-core businesses, make their balance sheets more efficient, give more dividends back to shareholders, much more M&A activity. There's record M&A transactions. So from a PE perspective, this is finally a very active market with a lot of flow. And one other thing I'd add is in the past there was a kind of a, let's say, negative connotation surrounding PE firms, but now it's quite the normal thing to have a dialogue with a PE firm. It's become an option for many companies and many investors. So I think this has really changed the dynamic around PE investing in Japan. Well, you have capital, you have deals, and capital deals that probably weren't as voluminous say 20, 30 years ago. So now the opportunity set is just simply that much larger. Remember also Japan is a very bank-centric financial model in essence. And so now you have other alternatives of financing besides bank capital. So that's really opened a lot of doors. I'm in the VC space, and believe it or not, Japan's venture market has actually increased tenfold in the last decade, yet it's still about 1/40th the size of the venture ecosystem, say in the United States of America. The Kishida administration, the outgoing government, has recently launched, though, a 5-year startup plan, which will still be ongoing no matter who's the next prime minister, that is really hyper-focused on how to make that ecosystem even bigger from now. So they're targeting a further tenfold increase in the number of startups, 100 more unicorns, and also directing a lot of public capital towards promising startups to really cultivate that next generation of innovation that Japan so desperately needs.